while you're looking at about a 5% gain at an index level or a little less, if 8,600 it is, do you think in your bunch of mid-cap stocks there would be a decent outperformance, a portfolio of, Make My Trip, Info Edge, Cholamandalam, Emami, Voltas, SKS? Would your index significantly outperform the 5% growth you see in the Nifty?
We'd hope so. Okay. But again, overall mid-cap as an asset class from a strategy perspective, we are still neutral. We're recommending a selective approach since last 6 months, rather than overweighting the mid-caps as a basket, because the relative valuations for mid-caps versus large caps is near all-time highs. So that's not really supportive of any further re-rating for mid-cap. But yes, in India, mid-caps, there's always selective bottom-up names, and that's what we focus on in terms of our recommendations or the conference.
Okay. You like Voltas as well. It continues to be your top pick in the cyclicals. Are you noticing any recovery at all in the investment cycle, Gautam? And would you restrict your picks to just Voltas, or do you think now some of the larger names, the L&Ts, BHELs of the world, also deserve a look in?
Again, our top-down view is that there's this cyclical recovery in the economy as a whole, as well as in the investment capex cycle, will be a very gradual one. And specifically in the investment and capex cycle, it will be very, very selective. It won't be as broad-based as you saw last decade. It's too early for all that. Only select areas of capex activity will see pick up over the next 2 years, and the rest will take much, much longer. So you have to be much more selective in terms of stocks, and overall sectorally, we're still maintaining a neutral stance on industrials and power.
We have got a couple of reports from some brokerages enthused by CMI's data indicating higher project starts and higher project completions. As well, of course, yesterday Arun Jaitley announced that 40% rise in excise collections, and even net of fuel excise hikes, it's a good 17% hike in excise duties. Is all this adding up to something better than you thought?
It's too early to extrapolate that. For the CMI data, our read is anyway that's coming off a very, very low base. And those percentage numbers don't really matter. And this is kind of showing up from whatever the push the earlier government in the last and then the new government has been giving to revive projects. And that's kind of baked into all the cyclical recovery estimates which is being talked about in the market, including ours. So that's not really a delta yet. Yes, the tax revenue collection numbers, again, April is not really the best month to extrapolate for the year because of
this is April, May,
etc. But yeah, May is again, even if you add April and May, seasonality, if you look at in terms of tax collections or even spending patterns for the year, these don't really skew the delta for the annualized number. Okay. And you have to remember that last year we had April, May as election years or election months, pre-election months, where activity does slow down a bit. So it's too early to extrapolate that in a big way. So we'll wait for that trend to pick up over the next 2-3 months before building in more upside from those numbers.
Okay. What's your own view on how investors should approach this large cap versus mid cap game, Gautam? Because last year mid cap saw huge outperformance. But do you think for the rest of 2015 mid caps will continue to see that kind of outperformance, or given the run up that many of these stocks have seen, you would be a bit cautious?
So as an asset class, I'll definitely be cautious from the short-term point of view for mid-caps. But over the long term, we've seen over the last 5 years, 10 years, etc., mid-caps have outperformed large caps, just like any growing developing market. So from a long-term point of view, definitely prefer mid-caps. But yeah, from a 6-month perspective, as an asset class, be cautious there. But obviously, India's mid-caps is always about more individual stocks rather than an asset class.
Fair enough. Well, finally, Gautam, are you mellowing your numbers at all because of the global environment? Probably because of the rise in Western bond instrument yields, bonds as well as US Treasuries. We have been seeing, and we have heard a lot of people arguing that flows into emerging markets are slowing and could slow further if the yields continue to rise. Is that baked into your 8,600, or do we still remain hostage to further falls because of the global environment?
So that's kind of factored into the broad macro framework we are running with, and we're not really worried about that as being a big negative delta for India as such. And in that context, we're still maintaining our stance of inflation and interest rates surprising markets and investors positively, and still sticking to 75 basis point more rate cuts in FY16.
Ooh. That's nice to hear. Gautam, thank you very much for taking time out for us when you should be really busy in your conference. Hope you have a very good conference. We'll touch base with you thereafter.